Hello and welcome to another edition of the Symmetry Spotlight, where I break down financial topics and common investment questions with the goal of helping you make sense of the world of finance. This month's topic is taxes. Specifically, we're going to talk about some of the most common tax deductions and tax credits that could be available to you as we get the ball rolling here on the 2024 tax season. First and foremost, I have a very quick disclaimer. A lot of the tax saving strategies that I'm going to talk about, they have eligibility requirements. So if you want to determine if any of these are going to make sense for you, obviously you can talk to myself and or your CPA or accountant just to verify that these are going to be available for you. To start us off, we're going to talk about tax deductions. Deductions are used to reduce your taxable income. Nowadays, most of us take a standard deduction on our taxes. For 2024, standard deduction for a single filer is $14,600. So if you're single and let's say you made $100,000 last year, you can deduct $14,600 off your income so that on paper, you only made $85,400. And if you're married, the standard deduction for couples doubles to $29,200. And even though we've made it into 2025, it's not too late to take advantage of some extra deductions, which could lower your taxable income even more than what your standard deduction is. One of the most popular tax deduction options that we see is the traditional IRA contribution. So if you meet all of the eligibility requirements, you could contribute up to $7,000 to an IRA account if you're under age 50, or $8,000 if you're over age 50. And that's per person. So if you're married, you can double those numbers, giving you anywhere from $14,000 to $16,000 that you could contribute to a traditional IRA account. And not only are you possibly able to deduct those contributions from your income, which saves you money on taxes, but you're also saving for retirement, which is a good thing to do too. Another popular kind of last minute deduction strategy is the health savings account. If you're eligible, you could add up to $8,300 to a health savings account if you're on a family insurance plan, or $4,150 if you're on an individual insurance plan. And if you're over age 50, you could add an extra $1,000 on top of those normal contribution limits. So those contributions can be tax deductible for you. And money that you take out of the HSA that's used for qualified medical cost, that money comes out tax-free. So essentially, you're getting double tax benefits by leveraging a health savings account for yourself. Traditional IRA contributions and health savings account contributions, those are both strategies that you can use right now, even though we're already into 2025. Most of the other tax deductions are backwards looking. Meaning these would have already had to happen in 2024 for you to be eligible to take the deduction right now. So here's a couple of examples to keep in mind as you get your taxes done, just in case any of these could apply for you. Did you have student loans in 2024? If you did, then you might be able to write off up to $2,500 of your student loan interest against your taxable income. Or how about medical expenses? If you had significant, and unfortunately I mean significant, medical expenses last year that ended up being more than 7.5% of your adjusted gross income, then you may be able to itemize on your taxes and then deduct some of those medical expenses. What about if you had any investment losses last year? If you invested in a non-retirement account and then you had realized losses, you might be able to deduct up to $3,000 in losses against your income to the extent that those losses exceed any realized capital gains that you have for the year. Deducting investment losses is very complex, so if you want to learn more, there's a really good article on my website called Counteracting Capital Gains with Tax Loss Harvesting. Other than that, most of the other deductions like mortgage interest, state and local taxes, charitable donations, gambling losses if you had some bad luck at the new casino, those are really only available now to people who are eligible to itemize for taxes. Okay, now let's move on to tax credits. So after you've taken all your deductions, you're left with your final taxable income, which is used to generate your tax bill. So let's say your tax bill comes out to be $5,000 for the year. tax credits are used to directly reduce that tax bill. So here are some of the most common ones that we see available for 2024. For starters, got any kids? Kids are expensive, but you could qualify for a tax credit of up to $2,000 per kid with the child tax credit. Are you paying for daycare for those kids? If so, you could qualify for up to $2,100 in credits, depending on how many kids you have. Or maybe your kids are older, they've graduated from daycare costs, and now you're on to college costs. You could qualify for up to $2,500 tax credit per student with the American Opportunity Tax Credit. Or maybe you have higher education expenses for yourself. If you took any classes or did some professional development programs, you might be able to leverage the lifetime learning credit to get up to $2,000 in credits for the tax year. The Savers Credit is available if your income is under certain limits. So this allows you to receive a percentage of your retirement account contributions back as a tax credit. Again, saving for retirement is a good thing, and if you're eligible for this, saving money on taxes is also a good thing. Finally, we have some energy efficient tax credits that are available for 2024. The solar tax credit could be available to you to get back up to 30% of the installation cost on a solar energy system. Or did you buy an electric vehicle last year? If you did, you could qualify for anywhere from $3,750 to $7,500, depending on the vehicle you purchase and the guidelines with that. Maybe you made a home improvement project that could qualify for the energy efficient home improvement tax credit. So things like energy efficient windows or doors, there's a whole list of them and lots of examples, and there's lots of rules for these credits, but that could be worth up to $3,200 if you qualify. So there you have it. Those are some of the more popular tax deductions and tax credits that we see being leveraged for 2024. As I mentioned earlier, I highly recommend that you work with a qualified accountant or a CPA to prepare your taxes, and just make sure that you're taking full advantage of all the options that are available. If you have any questions on these strategies, please give me a call or send me an email. Otherwise, I look forward to talking with you soon.